Alright, welcome into this new video about SMT Divergence. In this video, we're going over how you can spot divergence, how you can use it in your trading, and how you can spot reversals and be always on top of the best and biggest price move. Without further ado, let's dive in. Usually when you have correlated assets like NQ, ES, and YM, the three indices, they follow the exact same structure. So for example, if NQ makes a higher high, you expect ES and YM to follow. If they make a lower low, you expect ES and YM to follow. NQ makes a higher high, higher low, higher high. They all follow the same structure. But in SMT, one of the assets fails to follow the same structure, it can indicate a reversal. So for example, NQ makes a lower low here, but ES or YM fails to make a lower low here, it makes a higher low, and it can indicate a reversal. There's a difference between a bullish and a bearish SMT. For a bullish SMT, the SMT will be at the lows. So one of the pairs makes a lower low, and one fails to make a lower low, makes a higher low, and indicates a bullish reversal. A bearish SMT happens at the highs. One of the correlated assets fails to make a higher high. For example, here, AQ makes a higher high, and one correlated asset fails to make a higher high with an SMT or a bearish reversal. First example is a bearish one. We are on the 26th of February. It's a 9:30 high, and let's mark it high out. And we'll do the same for the high on ES, 9:30. And as you can see here at 11:45, NQ took out this high, and here this high is still intact, 11:45, it was right here. So if you mark this out, AQ made a higher high, and ES made the lower low. And we know, okay, that is a bearish SMT, so we can look at a possible reversal to the downside right here. With the benefit of hindsight, we've already seen this, but if you're live executing, you can anticipate on this. Now let's look at a bullish example. Thursday, 22nd of February, we have here this 550 low, mark this out, and it gets taken at 9:30. And if we draw out the same 550 low at the ES, see it's not taken out. So now we have a bullish SMT. And why? Because NQ made a lower low and ES made a higher low. So there's a divergence in structure. So you know, okay, there could be a bullish reversal coming in. And of course, again, it's in hindsight. The question I got asked a lot is which pair are you going to trade right now? If you know, okay, I see a SMT forming. Use two rules. The first rule is, for example, in this bullish example, the one that fails to make a lower low, in this example, ES is stronger because it doesn't take out the low, so it's stronger. So I would, for bullish, because it's stronger, I would trade ES. And also what's important, who has the clearer structure. So for example, here you have a clean displacement, leaving fair value gap, and then two taps into the value gap. And here on NQ, it takes out the low here, and then it don't give the clear displacement for value gap. Of course, you could take this order block entry, but the price action on ES is way cleaner during this SMT. Okay, so another question. If you see the SMT, how can you enter on it and how can you use this in your advantage? How you should use this SMT not as a single entry model, but used as an extra confluence. And when you see this SMT forming, then go to the lower time frame and look for a low time frame entry model. For example, here on ES, ES failed to make the lower low, so it's stronger. So if you have a bullish SMT, I would prefer to trade ES. And here you see I use two lower time frame entry models. This is the 2022 model, sell liquidity taken, displacement upwards, leaving a fair value gap. And you should look at the one that breaks structure. This is zero break structure. Which fair value gap did that? It's this one. So this fair value gap is what is created. Entry order here. Stop loss between the last swing low, the lows right here, and target 1 to 2. You're already here right there. If you want to be more safe, you can also put it at the low. I have a bigger trade with 22 handles, but I'll prefer just below these lows. So again, guys, for an SMT, look at correlated pairs, look how their structure is, look at when a certain pair fails to follow the same structure as the other correlated pair, and you have an SMT on your hands. When you have an SMT, use it as an extra confluence together with your lower time frame. And then the question, which pair should you trade? If you have a bullish SMT, the strongest one. If you have a bearish one, the weakest. And look at the one with the cleanest price action. And if you found an SMT, go to your lower time frames. For example, here the 2022 model with the sell side liquidity, displays without leaving per value gap, and the SMT will help a lot catching those reversals. I hope you find this insightful. If you did, please like and subscribe, and I'll see you in the next one.